Who am I? So as I was telling you before, I am originally from Spain. My name is Ivan Delgado. I've been trading the markets ever since 2007. And I guess that makes me a veteran trader. And I want to believe that I forged my technical trading style through a lot of hard work, a lot of dedication, but also, as I said to you before, being provided the right education. I've actually put in an insane amount of hours over all these years, like tens of thousands of hours. And yeah, I did get lucky to get the proper education so that I'm not being swayed by the constant bombardment of noise that exists out there. Do not forget that at the end of the day, when it comes to trading, this is a very deceiving and cunning. There are many deceiving and cunning techniques out there that are going to be all the time. They really want your attention. Either it is through strategies that sell for a specific price tag, either it is whatever. It's like there's a whole plethora of marketing techniques that go on to trying to capitalize on the ignorance of people out there. Okay, now I've been living in Bali for the last 10 years, and I'm married to an Indonesian with two beautiful young kids. I live here in the area of Canggu, and as a fun fact, and something that also Sim has done, I gotta say that I'm typically the main source of inspiration for my wife's comedy sets at Deus on Fridays nights. And so I intendedly get to take the spotlight more than I liked when it comes to her jokes. And that's completely fine as long as she earns, I guess, a standing ovation. Now, I've been trading cryptos on and off since 2017 when things started to head, when all the cryptos started to get the headlines. I am not visionary, or as they used to be called before, lunatic enough to have been involved in 2013 or 14 and having reaped the enormous benefits of holding Bitcoins at 2-digit price points. No, that didn't happen. And yeah, ever since last summer, I really turned the corner, and that was kind of my inflection point. That's when I realized that it looks like no longer this seems to be just the Wild West of 2017 with lots of ICOs. It looks like the industry is maturing, and that actually gets to be also reflected, especially whenever we have crypto alt seasons in the price action and in the alpha generation that exists. Okay, so with that being said, I definitely think that this transition from traditional assets, I used to be very much involved in Forex, into cryptos has definitely been very well warranted. And at the end of the day, it's not that I fully abandoned Forex or any other asset class like stock indices, but my motto has been that my focus goes where money flows. And if there's going to be protracted trends in certain industries or sectors, and in this case, just focusing on cryptos, that's where my focus tends to be most proactively. Now, my style of trading is best defined as a swing type short-term speculator looking to constantly exploit supply and demand imbalances at key decision points in the chart. So I have 3 proprietary entry techniques which I teach, and my positions tend to be open for a few days up to a week or 2, really maximum. It doesn't really fit my profile to be holding things for months on end. Okay, now big heads up here, because as I was telling you before in the introduction, like the more that you trade the markets, especially if you're not just simply holding a bag and then set and forget, but the more that you really want to get into this game by reading the ebbs and flows, the more that you eventually realize that this is really a mental, psychological game. And what really sets you back from realizing your true potential is going to be not really just applying a successful strategy, a strategy that has been very well back-tested, but it's more to do with your own conditioning and than the actual right conceptualization of a method that anybody can learn or the majority of people can learn. And I always give you the same analogy in this very telling example. And it's like, and I know that it's very, very cliche, just giving you this example, but look, when an example really works and clicks with you, it's good that I just keep repeating it. And it's like whenever you flip a coin and then there's going to be heads landing and you get $100, but when it lands on tails, you lose $50. You would be, with all due respects, like you would be pretty damn if you don't want to be playing this game all day long. I mean, statistics are completely in your favor, okay? Whenever you have a 50% chance over a large sample of flipping the coin, and then you get twice as much when you win than when you lose. And the thing here is that if you accept that to be true, it is a universal truth, and yet you have been struggling, which is a very well-studied struggle by many traders. If you struggle to procrastinate in booking your losses, and you find that booking your losses is something that feels like a negative experience, then we have to really conclude that there is some psychological reason that is born out of your social environment, and that is ingrained within us. From very young age, we are being told, this is something that we do, and that's the right thing to do. And then we always told, being right and being wrong. And whenever we trade the markets, we really need to completely think from a much more probabilistic mindset, and we have to progressively flip these ideas on its head. So, it's an arduous and tedious process. It takes, for me personally, it helped massively to engage in meditation, in shamatha practice, and really engaging in this personal growth journey, okay? Now, I run a YouTube channel where I kind of just essentially, what I do is I provide the content orbits around highlights and spoilers that go on within my mentor room. And the mentor room that I run is purposely created to mentor people, and I have a genuine interest to really help them to operate the markets day in and day out and be equipped with the right knowledge base. But at the same time, I recognize that I'm not just going to be throwing out a course and then people are just going to be forgotten. To me, that's a ground zero. What really becomes the inflection point for the majority is that they are with me within this journey. They see me trading, taking trades day in and day out. I live trade. I provide ongoing lessons. I provide feedback. I do all that in interactive video lessons through an application that's called Loom. So they far from feeling abandoned, but the opposite is true. Okay, so that's what I do aside from trading. I find that trading otherwise is a very lonely process to be engaging on. Now, next, the quadfecta, 4 Fs. To me, my life surrounds around family, friends, finances, and fitness. That's what my lifestyle choice has been. Trading is not just about learning a system or constantly improving your mindset. Having a balanced life goes a long way in substantially increasing your chances of success in any endeavor, especially in trading, where you have to really be on point, switched on whenever you are engaged in the markets. Okay. Now, value time. It doesn't really cut it that you just say, hey, I'm passionate about trading, and I'm going to give my absolute best, and I'm going to be obsessed with it. Sooner or later, you're going to burn out. Value time. Once again, another analogy that I absolutely love. Warren Buffett, 90 years old, he's worth $80 billion. If you were to ask him today, would you be trading your age for being 25 years and also trading the majority of your fortune? He would have no doubt. He would go back to being 25 years and probably sacrificing all his wealth. Bottom line and moral of the story, time is infinitely more valuable than money. We can be spending here the next hour talking about trading, but have a balanced life. For me, what I achieved through this quadfecta of 4 Fs really gives me a nice lifestyle choice. Research, positive psychology shows that if we are in a positive mindset, we tend to be more productive, more creative, we connect better with people, we can be more re-energized physically, intellectually, and we essentially have more fun in life, which at the end of the day is what really matters. At times, really, 2 days ago, I was actually entering my room, believe it or not, guys, and this is an off-the-cuff comment, there was a fucking cobra in my room, a baby cobra. I got bitten by that cobra, I'm gone. That actually helps you to also value life even more. It's like, man, I can be gone any minute, have a balanced life, have fun while you're living, and you can also learn trading the financial markets. And excuse my language here. Now, many times what happens, and what I've noticed to people that I either train or that I've come across, is that they want to be glued to the screen all day long, recipe for disaster. They're probably going to be burning out. You want to have a life apart from trading that gives you that happiness, that energy, that connects you with people, and that sets you with the best mindset. And then you define the time slots that you want to be trading. For me, I actually allocate a few hours during the Asian session, and then I wash, rinse, and repeat the same process through the US session. I have studied very methodically what are going to be the volatility and the behaviors that are most prone for me to capitalize on the market, that's what I do. All right. So yeah, that's on a balance, from a balance perspective. Now, technicals, the missing link, and this is going to be very much linking back to my introduction. This is what I noticed, that the pattern is like people in these meetups, they seem to be rather lost when it comes to technicals. So in cryptos, we can separate that there's going to be 3 different branches of study. We have fundamentals, we have on-chain analytics, and we have technicals. Now, it is my firm belief, and this has been highly vindicated after attending, as I said, all these months of crypto meetups here in Bali, that technical skills are often the most, either they're going to be the most overlooked aspect, or at least where people have the hardest time wrapping their head around. Now, why do I specifically want to emphasize technicals in this topic of today, and why I say that technicals are the missing link? A project that you can be bullish on can boast to enjoy great fundamentals, can actually have the projections of generating all this adoption and network effects. And, on-chain data might be supporting this notion. But if technicals look crappy, if technicals are not in line with that view and do not agree, that is going to be, in my opinion, the purest and like the most legit message that the market, for whatever reason, is not going to be manifesting out this bullish view. And therefore, as a short-term trader, I want no participation until the price speaks, okay? And then we have other projects that might not actually carry the fundamentals, or they might start to carry the fundamentals, but the price on top of that is actually giving you some great setups. That's where you really want to go hard on. That's where, or at least that's where you really want to be focusing your attention. Now, as a trader, something that I want to point out here, opportunity cost oriented. The good thing about being a short-term trader is that it makes you be very conscious of the time component and how being uninvested, not invested, but uninvested, can also impact your opportunity cost. And so that's why it's very important. And we actually get to have opportunities almost on a weekly basis to place our capital to work in the projects that are most conducive, are more constructive to actually be putting on a breakout trade, which is what I typically trade, or a trap pattern, which is also something that I like to trade. So having technicals in our favor is going to allow us to participate in these projects on a weekly basis. And I find that to be very advantageous, because you constantly put your capital to work. And as a short-term oriented kind of trader, as I said, there's almost always a handful of candidates for a nice play. In the last few weeks, we've had Axie Infinity, we've got Sushi, we've got Phantom, and I will go through the charts in a minute. I will also walk you through the actual trades that I put in, how I share that with my room, how I made a video about it, etc. Okay. Now, there's going to be this perpetual debate between, what's best, technicals, is best fundamentals, and people, again, they just usually get caught up. It's not, no, I want to defend just technicals, or I want to defend just fundamentals. Again, you just be holistic in your approach to the markets. Both are really, really good to be monitored. At the end of the day, if you think about fundamentals, ignoring them, you're not going to be as equally equipped as someone who understands, looks like Solana is a great project, is very innovative, it actually has some features that others lack, and fundamentally it looks like it's picking up some nice momentum, whatever, usage of the network. And if on top of that, you have the technicals, that is kind of like going full circle. So that's why I'm saying that do not just disregard one for the other. The fundamentals, you need to be tuning, because the fundamentals is gives answer to the real whys that matter, okay? And the technicals are going to be giving us more a response of the hows. So let me give you an example. Like fundamentals are going to be giving us this whys of long-term trends. Like if you think about Apple, if you think about Netflix, Zoom, whatever, like if fundamentally these are companies that are going to be strong or are leaders in their market, sooner or later that's going to be reflected through also the price action, okay? And technicals are going to be there assisting us to create a roadmap that takes us from point A to point B, and we can have through these technicals a calibration and adjustment of the risk that we want to take, the potential reward that we can collect out of it, etc. Okay? Now, I want to just give you just kind of a case in point here. We had an extraordinary run in AXS Bitcoin. of the daily. As you can see here, this is one of those projects that has been decoupling from the entire market. Okay, so we had AXS BTC going on a rampage, more than 400% plus up in a matter of weeks. And yet the entire market appears to be now going through another phase of bearish movements. Now, you can see here that this is the type of breakout trades that we're going to be monitoring, and how a market that has the fundamentals and the technicals, this is what we call a squeeze trade. We got volume behind. We've got a very nice worded explanation of what I was looking at. This actually was posted in my mentor room right here ahead of actually happening. We had a selection of markets, and here we got the AXS making a movement. So I was actually monitoring ahead of the actual breakout. So, but the bottom line, and one of the things that I want to emphasize, that there is going to be at times projects, virtual assets that are going to be making a movement whenever we have fundamentals, technicals. And in the case of AXS, it has the thematic, it has a theme, which is play to earn, that has been actually picking up quite a nice momentum in terms of media attention and so forth, ever since there was a CoinDesk news being published. Okay, so something that I wanted to emphasize, and actually if you go to, this is a website that I actually suggest everybody to bookmark. It's called tokenterminal.com. And if you come to Token Terminal, you actually can see the tokens, the virtual assets that are going to be dominating in terms of revenue generation. So we got here, let's just metrics. So we got total revenue, protocol revenue, price to sales ratio. It's very interesting. And look at Axie Infinity. It's really blowing it out of the water. Like really, it's generating 4 times as much as PancakeSwap, MetaMask, you name it. Okay, so SushiSwap is right there as a 5th or 6th project. Okay, so let's go back to the presentation here, and then in a matter of 10 minutes or so, we'll dive straight into the charts. But I find that this is very fitting, you know, talk about all these aspects first. Now, objective and profile. What's my objective? What's my profile as a trader? I aim to grow my BTC as a unit of account. If history is any indication, BTC has been absolutely BTC has absolutely slaughtered US dollar in terms of capital prevention by averaging, you know, on around 200%. I might be wrong, you know, give or take, you know, 10 or 20%, but on average it's like 200%. BTC tends to appreciate against US dollar on a yearly basis, okay? And that's been happening for more than a decade. So if you had to think about what would be the most logic unit of account that you want to cross-check your capital, your total capital against, I would think BTC hands down all day long, okay? And because of that, my main focus, believe it or not, I see many people trading alts versus US dollar. To me, it defeats the purpose of accepting as true that BTC is a better unit of account. Therefore, the main focus should be trading. In my opinion, what I do is I trade BTC US dollar intraday, by far the most liquid market, and I also trade alts versus BTC, and I barely ever look at alts versus US dollar, because if I'm going to be engaging in alts versus US dollar, I have in mind making US dollar as a profit. I want to keep making BTC as a profit and not gamble my BTC away. Okay, so that's something very important if you ever want to go down the route of trading more kind of a short term as opposed to just being a long-term holder or hodler. Now, to become involved in trading cryptos full-time as I have, you can accomplish that through different styles. You can either be an early adopter, which I wasn't, and then you can have a holding mentality, set and forget. You can be an investor that maybe a few times a year in and out of some place, or you can develop a more, I would say, a more predatory or speculative profile, as I have done over the years, to read these ebbs and flows and trying to find where the next opportunities might exist. And so what I do then is I look to spot all these opportunities through a watch list that I get to organize every single day. And so I always know what are the markets that might be about to show us a breakout. And I always mark out the price points, which makes it easier and more straightforward as a process for me to understand, hey, is an area being broken? And that is going to be leading to a potential explosive expansion of volatility or not, okay? And as I always tell my students, the skills that you get by learning how to read prices like correctly are going to be with you for life. I mean, obviously then practice will make perfect, and it's going to be, you know, lighting your or switching that light bulb for you. And the more you practice, the more that you can start to depict certain certain actions by the market. And yeah, I mean, even if you're going to be a long-term holder, I believe that any style can really benefit from what I'm about to introduce today in terms of like the principles and how I'm reading the charts. Okay, and yeah, we're getting close to it. So yeah, the last thing that I wanted to mention before we get to the nuts and bolts is that for me, part of trading is not just constantly being involved in the market and just looking for suboptimal setups. For me, like one of the things that separates good from great traders is recognizing something that I'm going to be touching in a minute, and that is situational awareness. And so that makes part of trading at times just essentially be sitting on the sidelines, because you recognize that the market conditions are not favorable. Whenever you recognize that the market conditions are favorable, then that's when you can start to become more active trading again. If not, just chill out a bit, and then the time will come inevitably that is going to be favoring once again your strategy. Okay, I always tell that you have to let the market come to you. If you really are going to be wired to such an extent that you are going to be taking decisions out of wanting impulsivity, out of impulsivity, because you're getting bored, because you like that sensation of just getting in a trade and see your account go up and down, you're really missing the point here, Akian. You have to treat this as a business. Your losses are going to be the expenses that it takes to run a business. Your winners are going to be the revenue that you bring in as a business owner. And that's how you should really approach trading if you want to do it in a more professional manner, okay? So just a point that I wanted to make. Now, my trading process, what I do, and that's going to take us straight into charts. For me, one of the best weapons that I have come to learn over many years of trading is the power of meditation. I do that about 10 minutes per day. I know that at times it's a cliche that, oh, just meditation is just going to be the magic trick. Or to me, like doing intentional meditation and knowing what I'm aiming for, which is just essentially emptying my mind and being very much present of my own thoughts, that goes a long way in helping me to rewire my brain for success, build emotional IQ, and other elements that are going to be absolutely essential for me to trade the markets successfully, like improve pattern recognition. You can actually see an upgrade over time of your retention of memory, a lot of benefits, okay? So a major challenge for me in the past was that I used to actually go and activate my fight or flight response to certain tense situations whenever I actually had skin in the game and I had capital at stake. And my attitude at the time was not really stay calm and relaxed, but rather it's just I was getting tense. I wanted to actually front run my take profit. And I know deep inside that that's not going to be leading to any great outcome, or at least skewing the statistics in my favor. And I kept doing that. So meditation really helped me. The shamatha practice really helped me to be more mindful, be more concentrated. And so it's something that really has gone a long way, okay? Now, with that being said, let's now connect that point of meditation into what comes next within any given day, from Monday to Friday. I don't typically trade on the weekends. Remember, balanced lifestyle. So, state of the cryptos. What I do next is analyze what the heck is going on in the crypto space. So let's go back into the charts. Now, as you can tell, I have a number of lists here. Binance, BTC pairs, Binance US dollar pairs. I got Forex pairs. I got Forex indices pairs. I got a whole overview of the market. Why? Because I know sometimes FTX as an exchange provides some of the more, I guess, hard to find indices, like the DeFi index they put together. They do it through some weighted calculations, the alts, perpetuals, and so forth. So I like that as an index, as a list. And then stocks and commodities. So here's what my day looks like in the very beginning. I asked myself from a very, I guess, eagle view, high altitude view, what's the state of the market? Now, let me give you a bit of like general perspective on where we at the moment. A lot of people might be promoting or being proponents of the idea that, yes, we're going to see a bounce once because of the Chinese miners fad is over. And we've seen this consistency of the 30,000 mark in BTC being rejected over and over. Like, hold those thoughts, because I'll say this. What I am looking at right now and what price action is communicating is not looking that conducive. It's looking pretty ugly, I gotta say. We're not out of the woods, far from it, okay? Now, I have a proprietary way of analyzing the markets that gives me, first and foremost, what I call situational awareness. Now, for you to understand situational awareness, essentially, situational awareness comes from is a term that was born within the specialist and the rather, more secretive world of military ergonomics. And it really meant to understand what is going on around us, what are our surroundings, how can we process the information that we are presented with in a way that is going to be conducive to the strategies that we are applying to make a profit out of the market. How can based on these strategies become either more actively trading or recognize it is time to be passively trading. And this situational awareness through this state of the cryptos and then going into the individual charts is absolutely critical. Okay, we really need to recognize how vulnerable the market is, how vulnerable we have been in the recent days to weeks, depending on the string of wins or losses that we've had. Okay, so what am I reading right here in the BTC US dollar and the other charts? I'm reading that we are, and let me just zoom in the chart. I'm reading that through structure, momentum, and volume, we are in an unambiguously bearish market of the weekly until proven otherwise. Now, to back up that thought, I have been conducting, and ever since 2017, trading this type of more kind of like capital redistribution kind of pattern ever since 2017. And I want you to observe one thing, okay? Like, we can go back as far back as you want it. Just bear with me here, because this indicator, because of the little history that existed, let me just, like, for example, here, this was supposed to be painted in green. It wasn't painted in green. It was actually painted in red, but that was actually a break of structure. Now, these two windows here, these are very instrumental for my read of the markets. One tells you the structure of the market, and the other one is going to be telling you the momentum of that market. Okay, we're going to be digging into it real quick. Okay, and the education that and the concepts behind this structure and momentum. But I want you to bear in mind one thing: whenever you see this vertical line in either green or red, that is going to reflect a point in time when the market has shifted from being in a bullish state to being in a bearish state, or vice versa, based on market structure and market momentum. So I want you to notice that every single time that we get that line, because we have a realignment of structure and momentum, the market tends to suffer for a significant period of time. Here we had that crossover. Structure and momentum were breaking to the upside on a weekly basis. Even though we actually went back and break below, we never accepted. So that actually remained, even at that point, a bullish market. And the same can be said in other points in time. It is a very highly accurate pattern when monitored of higher time frames. Structure and momentum are going to be, for the most part, dictating the attitude that players are going to have towards a specific asset class. Whenever we have this consolidation with a breakout with increasing volume, more often than not, there is almost zero chances that you're going to get a V-shaped type of type of technicals. Okay, so that's where we at in the BTC US dollar on a weekly chart. Ethereum US dollar looking pretty ugly, and we are now, I will be shifting into the daily. We are now breaking a level of support. Ethereum BTC not boding well for the alts, because Ethereum acts as a vehicle, the first one that is going to be making a move and the majority of times is going to be Ethereum, and then the alts will follow suit. And market capitalization, as you can see, starting to roll over once again. Let's get into a bit more of granularity here, okay? That's what's important. Now, BTC US dollar, as you can see, again, state of the cryptos, and then we can go into the alts BTC and see if there's on opportunities, or I'll touch in some of the recent opportunities that we had. So essentially here, what you can see is that BTC US dollar, you can make the arguments that yes, because of the China, we had this urgent de-risking from China, and that has mostly come to an end, and the selling has been absorbed by all these people buying the dips around the 30,000. Here we can see that the 30,000 has been phenomenal in acting as a level of support. So between these two areas. Now, let me tell you something. In the grand scheme of things, from a broad range perspective, we are encapsulated in around 10,000. I would call it a 10,000 range. Whenever we had a range, we can detect the midpoint of it. That's going to actually be an important anchor point, and whether or not we manage to break above that midpoint, okay? Now, if we fail and we just keep consolidating over and over and over below this midpoint, that is a pretty bad signal for BTC. That's just the type of reads that I have been getting by the thousands over the years. Whenever you have a range and the majority of the time the market spends below the midpoint of the range, be watchful, because more often than not, especially when we had such an impulsive movement, very impulsive consolidation, this tends to lead to a continuation. Now, can I get more backing that this is going to be happening? Yes, I can, through volume in the spot market. By the way, the futures market, in other words, the derivative markets where people have been leveraging themselves up on the run up. Now, that is not as reflective of the market sentiment because there's very little activity and the open interest has been pretty much dead. But you can see here that all these buy-side days are very much characterized by very low volume, whereas the buy-side days, and I'm looking at Binance, which is a rather representative exchange on the spot market, are pretty, getting higher. Now, I'm not saying that we're going to be breaking lower, but watch out, because to the extent that Bitcoin just keeps putting pressure and more pressure, we might eventually be cracking that 30,000. If that happens, then we might be, again, what we've been fearful of, falling off a cliff. And it's not going to actually look pretty. Hopefully we keep absorbing like we've seen in these candles right here. But my perspective is that until proven wrong, this is a market that looks pretty ugly. Now, BTC it used to be decoupled from the market capitalization because of the run in alts and BTC, and so because of the run in alts and Ethereum. But for a number of weeks, if not months, we have a one-to-one correlation between the BTC market and the market capitalization. What does this mean? It means essentially that wherever BTC goes, the whole market follows. Unless Ethereum BTC is going to be putting on a bit of a run, like in this case here, we know this here. This is a market run that lasted for about 2 weeks, and we capitalized on a number of projects, but it has proven to be very short-lived, okay? So that's where we at in terms of the state of affairs. Looking pretty ugly, Ethereum selling against BTC, BTC itself looking pretty bearish against the US dollar, once again approaching the bearish, the delimitation of this range, Ethereum selling off, not looking pretty. You can also see the alts BTC. So this is when I get a sense. And by the way, this takes me literally 2-3 minutes to go through what it's taking me here 15 or 20 minutes to elaborate on. It takes me 2-3 minutes maximum, and then I move on, okay? So next, what I want to touch on is the watch list for the day. Having understood what the state of cryptos are, then what I'll do next is watch list for the day. So essentially, I'm going to be highlighting or tagging here some of the projects that I find that the technicals recently, looks like not anymore, but recently were constructive and where opportunities could have been found, okay? And as of late, right now I'm just holding like this position in AXS BTC. as I've been walking you through earlier before, that's the only position that was complete decoupling from the entire market, but the rest of the market is just not giving me any signs. So what I'll do is the following. Every single morning, if I have a project that looks bullish enough against BTC, I am going to be highlighting that project with a blue label. Right now, none, absolutely none, meets the criteria. Therefore, I'm not going to actually be bothering. Remember, pause, patience, lifestyle. Don't get involved if the market is not telling you, is not providing the signs. All right. Now, as of late, let me go back. So in retrospective now, what are the recent trades that I put on? And then you will understand the logic once I walk you through some of the components that I look into, okay? So let's look at FTM. Let's see if I can find it here, Phantom. There you have it. Okay, and by the way, here in the setups in the mentor room, I have an old trade setup. So I always provide these trades either ahead of time or the moment that I put in these trades, okay? And I do so through Loom videos up to 5 minutes. So here, got a breakout long on Algo BTC, Link BTC. We can touch on these trades, Ethereum, Sushi, etc. Not sure if you're gonna be able to hear.
Hey, members of the Discord room,
but
that's room. Good morning to all of you. So as usual, I'm going to be reporting my daily
week ago,
open positions.
More or less.
Remember that this week
that was a breakout trade on Sushi BTC.
Rage to me, it does look like alts are going to be making a move, and we've already seen that in several crypto projects. Now, one trade that I'm currently on, actually I've been filled in 2 different positions. One is in Sushi and the second one is in Algo. So I've marked these 2 trades, Sushi, and let me just place Algo right there. And I also got 2 other positions with limit orders, but I am unfortunately not yet filled. Now, these are positions that can be checked through my trade management software, that is Free Commerce. You can see here Ivanto Delgado at Gmail, and this is the current position that I'm holding. I'm up almost $2,000 or 8.26% in Sushi, Algo, just around the break-even point, and 2 positions where I am yet to see the orders being filled. Now,
okay, so that's just one example out of many that I can walk you through. So let me walk you now through FTM. This was actually a nice trade breakout. And so this is kind of like, I suppose, like the signature in my all-time favorite, and just essentially looking for a market that has been interacting with a key level of either support, well, in this case, support. We want to be bullish for the most part. And here we saw that the market had a level of resistance right there. Okay, I'll be walking you through these concepts of support, resistance, supply, and demand in a second. And we saw what I typically look for is a breakout with volume, and there we had it. It went for about a 2-to-1, and notice here, situation awareness, we had that level of previous support, 10 resistance, what we typically call an SR flip, and that's where we actually collected most of the profits. Now, you might actually get lost because I haven't gotten to the point of explaining what my entry technique in detail is. That can actually be done through a course that I provide. It's just kind of like giving you a bit of a spoiler here. But let me continue because I've purposely done this in a way that I can be rather organized. So now, whenever I enter a trade, I'm always going to be very mindful of the total volume in Binance. I'm not going to be trading any shit coin. Like if the crypto asset doesn't have sufficient transactions, sufficient volume per day, I'm staying away. My threshold is 100 Bitcoins. If a project trades more than 100 Bitcoins per day, I will be accepting that as a potential trade setup. You can check that out in binance.com/markets. You can, let's just say, like notice AXS is transacting in the BTC pairs, AXS BTC, 1,200 BTC coins. I mean, that's extraordinary. It's like the second one. No wonder that yesterday the AXS breakout was one that very welcoming, not just by the pattern, but also by the liquidity that was available in the market. Next, what I tend to do is I'm checking, there you go. So I'm checking the coin market cap, because sometimes, to be honest, I've never heard about that project before. Obviously, I'm becoming more and more familiar with the majority of them. So I do a quick check on here just to understand how it positions in terms of market capitalization, and what are the exchanges that it's listed. And also something that I find it to be quite positive for my own development is whenever I put in a position, like for instance, Axie has caught my attention just in the last 10 days. I've done quite a bit of due diligence and research on what Axie is all about, how it's being very transformational in countries like the Philippines, in Brazil. And this is, I think, something that will become very big. And that's really the whole purpose behind cryptos, which is helping, I guess, have a society in a world that is going to be a more, the playing field is going to be fair for everybody. And the play to earn industry and those games that are coming out are not only generating a lot of revenue, but a lot of people are coming out of poverty or making ends meet because of these games. And there's an amazing documentary about Axie Infinity that I highly recommend for you to watch. So yes, I do study fundamentals of some of the projects that I get longs on, and that gives me a better perspective about the whole market, and that gets me to be more connected about the market itself, okay? Now, that being said, I've already touched on situation awareness, but I want to emphasize that because every single chart is going to provide different situational awareness. So let's just stick for a second on Phantom BTC. Now you will notice that I got a bunch of indicators here. I will walk you through each and every one of them, okay? So, and this is how I work things out in terms of understanding the surroundings and really getting to grips on what are the dangers, what are the risks when I'm putting on a trade. Am I trading into a resistance? Am I actually facing an area that has been recently very stubborn to be broken or not? Okay, so the first thing that I'm looking at is structure. Structure of the market can be very well represented through fractals. Fractals, notice, are all these lines here. Now, a fractal is going to be formed whenever you have a set of 5 candles, and the mid candle, the third candle, is going to be the highest point between the 2 candles on the left and between the two next candles on the right. So it's kind of looking like a tent, and that tends to portray a moment of inflection in the market when we had a change of trend. That's really what fractal means, is a change of behavior or a trend change. Now, to the downside, the same thing. You detect a fractal, and in the vast majority of times, a fractal is going to really nicely depict a support or resistance or a pivotal moment in the market where we saw structure turning around. So that's the number one thing that I'm looking at. Now, for those that become students of mine in early stages and they struggle, we have an indicator called FT. FT stands for fractal. FTs are going to be monitored through different timeframes. Now, in my case, I look at the 12-hour and then the daily time frame. Okay, so I split that into 2 different timescales, and whenever this is painted in green, that is going to be suggesting that the fractals, meaning the structure of the market, is turning bullish in those 2 timeframes, and the opposite is true. Now, the SMT, that's the second part. Momentum, really important. A lot of people in the market want to be faking or fading movements, but momentum really is very, very important. It's the energy of an asset to keep moving in the direction or the path of least resistance. Momentum is energy, and it's going to take a lot of renewed commitment for the market to turn around that momentum. And I always make the analogy of whenever I go to the gym and at times I push the sled, and it is a very heavy sled, like 150 kilos to 200 kilos. My PR is 180. So let's just say 180. It takes a lot of energy and strength to start moving that sled through the carpet. But here's the key here. The moment that you stop that sled and the momentum is gone, do you know how much strength it takes for that 180 kilo or 200 kilo, getting there, to keep moving again. That's what it means to have momentum on an object and losing that momentum. It takes a lot of renewed commitment. And that's really what happened to Bitcoin. We had, like, when we are talking about BTC here, and people are selling you the dreams of, yeah, a V-shaped tap. Do you have any idea how much momentum we lost on this sell-off? I mean, we're talking about a 50% retracement. I don't think the market is going to be so irresponsible after this drop to just essentially go back up. You know, like, the momentum was within us, but the momentum is like long lost in BTC. And, you know, testament of that is all this range bound that we've seen as of late. Okay. So second component that I'm looking at is momentum. Right now, at the time in Phantom BTC, notice through this candle right here, we had a turnaround of structure and momentum. So I tend to take a very pragmatic approach by which I'm going to be playing around with different time frames. People tend to get too caught up on, oh, give me the exact time scale that I should be trading. Like, come on. This is not something that becomes an exact science, especially if we're going to be taking breakouts. What really matters here is more about the price surpassing, consuming, eating up supply, and then consolidating, finding equilibrium beyond that supply, beyond that resistance, than the actual time scale that you're going to be using. The time scale should be more about being calibrated based upon your time availability. But what is so convenient about breakout trades is that we've identified the situation awareness, and we want to be getting into a market that looks like there's a little bit of an air pocket here. There's a little bit of voidness that we can exploit. And then going into lower time frames, we actually get the vindication through this breakout, the volume. And that's the third thing that I want to be touching on, volume. Volume translates into the activity, the number of transactions that have gone through the books. Volume is a very telling, very revealing sign of the amount of commitment that you're going to have for that object, for the price in this case, to keep moving in that direction. If you have a breakout with very little volume, in this case, notice that the volume was way above the average, that is going to be boding well for a follow through. And we want those follow throughs. And we have a statistical edge when those things happen, and the situation awareness has been very well studied through the higher time frame. Here, we had a turnaround in structural momentum of the daily, and we did not have any significant area, and this is what I'm going to be touching next. We didn't really have a significant area of resistance up until that point, right there. Touch. By the time we have price moving at that point right here, we already at break even. And that's something else that we will be touching on later on trade management. Break-evens, maximum 1 to 1.5 to 1. No point not having a risk-free trade by then, okay? So volume, next, volatility. Volatility, massively important. Why? Because volatility at the end of the day is going to be it's a very cyclical thing, okay? So and we actually get to study volatility through the BBW. Now, you probably heard about the Bollinger Band. So let me just put that on the chart, on the main chart. This is what the Bollinger Band looks like. Yeah, it's just loading. Okay, so this is what the Bollinger Band looks like. It's an indication of volatility in the market. The more compressive that the volatility band is, the less volatility we've had, the more expansionary that these bands are, the two bands, the more volatility that we're having in the market. There is a way for this volatility, for this Bollinger Band to be expressed through what we call the Bollinger Band width. So this line in black is going to be measuring the distance between between the upper Bollinger Band and the lower Bollinger Band. The higher this black line goes, the more volatility we have in the market. The lower that it remains and is suppressed right here, the lower the volatility that exists in any given market. We want to enter positions when volatility is low, and so that we are front running volatility expansions. You do not, mark my words here, you do not want to enter from a risk reward perspective whenever volatility starting to pick up and it goes ballooning like this and out of whack. Whenever you have this kind of increase in volatility, which is again well reflected by just expanding, look where BBWS, very expansionary. Whenever that happens, there is going to be high risk that there's going to be a mean reversion. And a mean reversion essentially is going to either pause the market or reverse the market. But what it really is an extraordinary risk-reward prospect is to identify when the market is about to break out from a period of low volatility and predicting or expecting that volatility to pick up, okay? This tool, BBW, is very seldomly used by people, but I would say when taking breakouts is a phenomenal one because it gives you that sense of, hey, a market that is going through a period of low volatility. Hey, a market that is breaking with high volume. Hey, a market where from a point of view of situational awareness, we have structure and momentum in our favor. And you see that you keep stacking more and more odds on your side, right? So bottom line, volatility is cyclical. It constantly goes through these peaks and troughs over and over and over. You want to identify opportunities when volatility is below this orange line. This orange line essentially is just 100 moving average of this BBW, okay? So a nice, I guess, mean area for you to understand, okay, are we above the average volatility or below, right? So that's something else that students and myself I treat very carefully to understand whether or not we have opportunities in the market. Next, support and resistance and supply and demand. Massive topic. And because it's such a massive topic, let's go back to BTC being the most, I guess, representative asset of the whole crypto space alongside Ethereum. So support and resistance is a term that has become universally known, but what does it really mean? What does it mean, support and resistance, in the first place? Let's dig deep into this concept. Support and resistance is nothing more than what we call in financial literacy passive orders sitting on exchanges. Now, passive orders sitting on exchanges means limit orders. It means that people want to be filled in a market at a specific location, at a specific price point. And because of the stacking of orders, the cluster of orders at the specific price points in BTC US dollar, you can clearly see that there's an outrageous amount of limit orders looking to cap the price around the 35,500 or thereabouts. Now, it's not fixed in stone, so please don't think about 35.5. All the limit orders are at that exact price. No, it tends to be spread across an area, a range, okay? That's why the market moves with some, at times, erroneous patterns or swings where that high is not identical to that high, it's not identical to that high. But you get a sense that there is a lot of interest to be sellers at that point, okay? Now, passive orders are going to be creating resistance or support. In this case, resistance in BTC around the 35.5. That's what we call, that's what we call passive equal limit orders equal creation of resistance. On the downside, creates support, and because as a proxy of buy side limit orders. Okay. Now, where else do you perceive that we had an outstandingly high amount of limit orders? In this case, sell side limit orders, right here at the 40,000. Now, there is a specific way. I'm not saying there are shortcuts, but there are certain tricks and certain criteria that we use in my mentor room when I'm trading to identify what are going to be the best levels to take into account. And that really boils down to interaction and closing basis. If you actually think about it, a level of, let me just remove this one. If you think about it on a closing basis, a candle that closes here, that rejects at that point, that once again closes, not the wick that is actually falling within that region, within that line, but the actual close. If you think about it, that translates in the following. We have a market that is looking, price always is going to be telling you a story. Okay, so be part of that story be part of that journey, trying to dig in and learn that story. Okay, So here we had a push to the upside, and on a daily closing basis, we failed. What does that tell you? It tells you that the market had a goal. The market at the end of the day is going to be a constant auction process. It's going to be a continuous price discovery, okay? So we had an exploration, but sellers outweighted buyers, and the close just happened to be right there. So that's telling you that the heaviest orders are going to be somewhere around that close. Here, we could not be bothered closing, but rather just proving that level and reject it immediately. So whenever we have the alignment of a close on that segment, and then here we have the rejection through wicks, that only reinforces that the amount of sell side limit orders are plentiful at that point. Even more is whenever we actually had this breakout. And by the way, when we had this breakout right here, some people were claiming, oh, we've broken away from the range, because we actually had accepted beyond this closing basis, but we still had to clear that point. So that's why understanding resistance and support properly, it's really, really instrumental, okay? So that's how we identify levels of support, resistance, and what it means. Now, let's touch now on supply and demand and imbalances of supply and demand, and what the heck does that mean? Remember what I just mentioned? Limit orders cannot move the market. Limit orders can cap the market. But for you to see a market that is moving in a specific direction, you need aggressive buyers or aggressive sellers. In other words, you need active orders. In other words, you need market orders. You need people that are pressing the button to enter in market orders, or alternatively, you need a market that, yes, initially has clicked those market orders, and because of the amount of over leveraging that we've seen, like for instance, right here, like we had here a market that had initiated a lot of aggressive sell orders by selling at market, as opposed to having just sell limit orders. Sell limit orders are not, remember, not going to be moving the market. For us to see the market moving, you need to have aggressive sellers. You need to have either the Chinese miners recycling from BTC treasuries into the market because they have to refinance their relocation into other places of the world, whatever it is. But you have people with an urgency to sell their Bitcoins into US dollar. Whenever that happens, and that gets to be combined with a market that has been over leveraged, that can lead, especially when we had this like insane amounts of leverage, that can lead to a cascade of stop losses. And that fits on itself. And that's a move that eventually might not even reflect, the majority of times doesn't even reflect the fundamentals. It's just the market, like it's just the specific dynamic that is happening at that point in time, okay? Because of the cascade of stop losses. So let's keep building on this notion of active orders. Whenever you have a market that has seen an imbalance of supply or demand, in other words, aggressive buyers or sellers through active orders, you can tell that by the impulsiveness of the candle. Have we had, let me ask you, have we had as of late more impulsive candles to the downside or to the upside in BTC US dollar? I'm pretty sure that like really you don't have to force it. It's just obvious to the eye. We had a lot more, a significant amount of more sell side candles being impulsive than buy side candles, okay? Especially through this phase. And if you were to push me, I would say that ever since mid-June, we're starting to see that pattern re-emerging once again. Like ever since 40,000, this movement here, this is what we call supply imbalance. These are players selling BTC at the market. And whenever that happens, you want to be paying attention also to what are the areas that converge with previous support or resistance. If you used to be support turn resistance, and at that same price point or around that price point, we have the origin of a supply candle or a demand candle, depending on the direction that we focused on. Case in point, this one here. If you're a buyer, it is a suicide. It is suicidal to be going long around this point. You have what used to be support turn resistance right here. On top of that, you have supply candle. High chances, actually I did trade that one intraday, high chances that you are gonna see a reversal back to, giving it a shot at retesting the previous low, okay? So this is what it means identifying supply and demand as well in the price chart, not just support and resistance, but also supply and demand. And ultimately we're looking at price action, right? Now, next, as part of my decision-making process, I go through the entry technique rules, okay? So I predominantly have 3 setups that I trade. And out of these 3 setups, the ones that I'm most active in cryptos either includes a breakout pattern or a trap pattern. Now, the breakout is the one that, as per the latest market conditions, we have been getting the most, okay, in projects the likes of. And let me now walk you through. You see, I have this personal library, and this personal library, I either provide feedback to students, or they see me putting on a trade on the go. Like, so we had you can see here, like we got a breakout on Rune. We got a this was a feedback to Roger. We got a follow-up. So I do follow-ups as well. Like, okay, what's the trade management like once I put in a position? And Loom really is phenomenal because it just takes me 4 minutes just to run the students through an update of that position. We had, so even if I'm not going to be taking a position, I'm still going to be telling people why I don't take it so that I can reinforce the education, right? So .BTC, why I did not take it. At times, I'm going to be missing it. Or one BTC went for an exceptional run. I missed it. I just wasn't filled on my long position. Some others, like Algo BTC, nice one. Link BTC, another one that, let's look at Link BTC here. That was on July the 7th. Let's look into it. BTC. There you go. So remember, first things first, situational awareness. Right now, this market looks like shit. Like it really is breaking down and it's going nowhere that we'd like to be, that is going to catch our interest. That said, 1 week ago or 10 days ago, this looked completely different. It actually looked like we were bouncing off a huge level right here. It had actually acted as support for a number of different time sequences. And so we started to see, again, remember, structure momentum really matters. We started to see the turnaround right here on July the 6th, okay? So let's now dig deep into July the 6th and what happened in this market. I like the 4 hour, I gotta say, like on a 4 hour basis, like seeing the market close and then from there understanding whether or not we had a trade. Now, in terms of Link BTC, I want you to notice something here. So we had, let me just realign that with July the 6th. Give me a second. July the 6th, so that was the candle. Okay, we got 4 hour right here. So on July the 6th, you will notice that there was an awful amount of resistance right here. And through, notice this candle right here, like the maximum number of interactions that I could really see, it was on that line. In this line, you see interaction, interaction, you see interaction, you see interaction, you see interaction. So what that really tells me is that this is the key people that I want to be monitoring for an increase or for a spike in volume. Now, within the segment of these 2 candles, that happens. You can see the volume here. And so we had actually what we could tell a quick run to the upside. I believe that this was a break-even trade, if I'm not mistaken. It actually led to that point and then took us back into break-even. Wow, what we know never going to be doing is we don't want to undermine our statistics by getting a win that is just going to be 1-to-1 risk reward. Minimum is 2-to-1 risk reward. Okay. Now, in terms of placing our stop loss, what we typically do is that we're going to be selecting this area and we're going to be finding out what's the POC. Now for those that don't understand, the POC is the point of control. And the volume profile really allows any trader to evaluate the market context, to really keep track of this, what I said before, like this never-ending auction process. So remember that the market at the end of the day is going to be a constant negotiation process, and we can find out what are going to be the price points that have been most heavily traded. So within this range, you will notice that we had this area as the most heavily traded. We typically put our stop loss beyond that POC, so that if it gets touched, then it's just an invalidation. So the market just essentially is not going to, it has not gone our way. All right. So that's what vindicates that a trade has not played out. But let me tell you that breakouts have a fairly high successful rate if you have done your homework and you are not getting yourself, or you're not trading yourself into too much trouble, situation awareness, etc. Now look at Link BTC breaking to the downside. As I said, very much in line with what I told you in Ethereum BTC. Ethereum BTC really looks like this is going to be what we call a failure to rotate. So failures to rotate essentially means that the market did have a successful rotation here, meaning it did take out the previous lows. And then we've seen a correction. It's gone about, if I'm not mistaken, it's gone about 50% of the previous low, more or less. Yeah, a little bit higher than the 50%. And it has not reached the previous low. So that is going to be invalidating the notion that this market is on a bullish state. And now, once we have gone back maybe 70 or 80% of this bull run, this to me is almost guaranteed that we're going to be taking out these lows. And therefore, kind of like even reinforces more the notion that the alts BTC, this is not a good time to be a hero and trading these markets. Okay. What else? Something else that I wanted to, position size. So when it comes to position size, it is very important that you don't put all your chips and you don't bet the farm in one single trade, because one of the things that you have to be very mindful of is that the more your account goes down, the harder in percentage terms is going to be for you to recover back what you've lost. Okay. So I'm very methodical, especially for people that are going to get started getting their feet wet, to trade small. And only as you progressively make money, it might take 3 months, it might take 6 months, for people it might take years. But if you actually get that process right and you are mindful of your position size, you're going to have it much easier. If your account goes down 50%, it's going to take you 100% return from that 50% drawdown to make back just what you had initially. Okay, so just be mindful of your position size and always think about probabilities, and never be acting as if you want to be putting too much emphasis on one single trade. I mean, at the end of the day, as Mark Douglas used to say, unfortunately, he passed away last year. He is the author of the book, Trading in the Zone. He famously stated that the market is just a random sequence of events on an individual basis, and it's only when we place trades over a large sample that we can start to see that an edge is playing out. Just like when you flip a coin, you might have an event where out of 10 coins, you have 8 heads and 2 tails. That is not the most probable outcome, but it's a possibility nonetheless. But when you're going to have that flip of a coin 100 times, and let me tell you that it's like really, really hard, nearly impossible. I believe it's pretty much impossible that you're gonna have 80 heads and 20 tails. Like, I don't know the statistics, but probably it's like 0.00 something one, right? So there you have it. Position size is just incredibly important. Now, trade management, we always have to reach a balance between letting the market, and let me go back to the phantom trade, FTM. Okay, we always have to reach a sweet, like we need to hit a sweet spot between letting the market breathe, providing that wiggle room, and not being irresponsible by being up 2 times what we've risked and still keeping all our risk open. Okay, so there is a specific set of rules that we have whenever we take breakouts, whenever we have a trap pattern. And I'll see if I can go through a trap pattern. I'll get to the trap pattern next. But yeah, trade management is just incredibly important. You have to get that balance point where it is going to be, optimal for you to not just be petrified by the thought of, oh, I may have a loss and I should just protect my position, even if you're not even up 1-to-1 risk reward. But once you start to get to that one, you analyze the context. If you are hitting a level of resistance, that's it. Then let the market do its thing. At times we're going to go for a runner and a reaper, or at times we're just going to go back to break-even point, and that's perfectly fine. As I said, associate each individual outcome to a random event, but think about the probabilities are still going to be very well stacked in your favor if you let that play out over a large sample of trades. So that's when it comes to position sizing. And now who I trade with. So I trade intraday BTC. Now I gotta say that in the last 2 weeks, with the tightest range that we've seen in, I'd say, pretty much, I would say years, really. I mean, we have been in this 2,000 plus 3,000 range ever since early July. Most of my focus has not been in BTC until we make a true movement outside of this convoluted environment. So I've been very much focused on alts. So through this watch list, I look at what is setting up today. I guess not very fitting to be talking about alts BTC because everything is selling off. But yeah, the market at the end of the day is a constant story that you have to, mark my words here, objectively read and then come to terms about, is it time to apply patience, or is it time to go to be involved and to be active in the market? 2 weeks ago, about 7 days ago, it was time to. Now, once again, things have turned around in a pretty ugly manner, I gotta say. So who I trade with? Bybit and Binance. So Binance at the end of the day is because it offers the largest amount of crypto assets, so that makes it easier. And Bybit because I'm just used to the platform. It's very intuitive. Even on my phone app, I'm not going to be trading off my phone, but at times I do manage positions off my phone if I go to the gym or I come out of my CrossFit box or whatever. So that's, familiarity is something that goes a long way. So I've been very familiar trading through Bybit as well. And with that being said, that concludes my presentation. I might have missed something. There's so much you can do in 1 hour plus. If there's any chat requests, please, now is your time to speak. If you have any question, please, now is your time to post that question here. And if you want to follow me, YouTube, Discord, or Telegram, Flow State, you can reach out to me and I'll send you details. I'm not really interested to have like 100 plus students, far from it. I'm more about my main source of income is trading. And I got, dozens, like a couple of dozens of students. And that kind of like seems to be my sweet spot. If you're interested still, you can reach out to me and see what we can do. I'm happy to jump on a call and kind of like explore your motivations and so forth. That makes my journey of teaching way easier. So there you have it. Sim or anyone else, if you got a question, now is the time. Or you can type in the chat box.
No questions for me. That was great. I appreciate that.
Yeah. Could be pretty overwhelming, I guess, for people too.
Yeah, and it usually takes a few times to go through it to actually start to feel more comfortable with it. There's a lot of people who are kind of newer to it. So I think having that mentorship and just actually going through it and having somebody to kind of walk you through the process really helps a lot. And I know, like, trading is, like you said, it's a lot more. It's psychological. It's a skill that you learn as a person, including things like meditation and all that. So there's a lot more involved than just picking one and then leveraging yourself to the hilts. One thing I did want to kind of ask you is like, can you explain how you think of leverage? Because I know there's a lot of people who think of leverage as like this magical bar that I can just turn up and multiply how much I'm playing with. So like, what are your thoughts on leverage?
I think there's a misconception around leverage. So essentially, leverage to me is a tool that you can capitalize on by not having to allocate as much capital as you need. Like, you don't need to fully allocate your capital into your brokerage account, into your exchange. And that ability of, let's just say that I know that I have possession of $100,000 as my total wealth, but I don't need to send $100,000 to my brokerage account. Yet I know that my risk profile, my risk percentage is going to be based on that $100,000. Now, where people get it wrong is that they actually want to be controlling capital that they cannot afford to lose. And many times over, you're going to see that you have just pretend for argument's sake, you have a $10,000 account and you want to control, pretending that you have a $100,000 account, and you want to put in a trade that if you lose, it's going to blow up either your entire account or a significant percentage of your account. That's where leverage really becomes double-edged sword, and something that you have to be very, very, very mindful of. Now, it is human nature to put a lot more emphasis on what we can make as opposed to becoming very good risk managers. And ironically, what is going to add to the odds of you making it, like having longevity in this game, is you're going to be far more likely be in this game if you think about protection of the downside as opposed to how much you can make to the upside. But the human nature has it completely wrong. We get we get all these chemicals in our brain, and we get stimulated by getting to just think about the prospects of making a killing out of a small account. And that's completely fine if you actually have, let's just say that you got as a Christmas gift a $1,000 from your uncle, and you just want to blow it, you just want to gamble that away. Maybe give it a shot, but that would be a pretty bad practice and not something that I would recommend. So that's my take on leverage.
Awesome. I think you have some questions.
So Melissa is saying, I got a few questions here. Natalia, understood. Thank you. Any other channels to follow? Okay. Yeah, the YouTube channel is not called Trading Nuggets. What I provide are trading nuggets, but it's called Ivan Delgado. So that's my name, Ivan Delgado, Trading Mentor. When I go to the Discord URL, it says the invite is invalid. Maybe expire. Okay, guys. So here is the YouTube right here. Sorry, Ivan Delgado. Sorry, I'm not sharing my screen anymore. Give me 1 second. Right here. Yeah, I apologize if it expired, the link. I might have overlooked that. So yeah, this is the YouTube Ivan Delgado Trading Mentor. And this is the, what is it? This is the mentor room. Currently we got, about 30 plus students there. Yeah, I've never been promoting it or anything. As I said, like I never wanted to make this anything that is going to be not like is hard to manage. My focus is in cryptos, and what matters to me is trading in the first place. Okay, this just really represents a bit of a, I guess, a bit of a side income to run operations. I got a virtual manager that helps me out and just educate, and just kind of like my time goes invested into it. Melissa, great presentation, Ivan. Thank you. You said you mainly trade BTC, so not sure if it's best, but my question is, what other properties you take into account adding to your portfolios, and what's the weight of the market cap, trading volume, tech innovation for you? Okay, let me just go one question at a time. There's a bunch of questions within that one. You take into account adding to your portfolio. What's the weight on the market cap? So when it comes to my portfolio, Melissa, I am sitting on BTC unless I put on a trade. Now that tends to change whenever we go to the state of cryptos. Whenever we have Ethereum BTC on the weekly, let's move to the weekly here. whenever we have Ethereum BTC running up, having a bull run, as in the case right here, that's when structural momentum chases around and it lasts up until that point for a few months. Here, once again, structural momentum turning around. Whenever that happens, I'm going to be distributing either 1/3 or half of my portfolio, my entire portfolio, into Ethereum, because I want to be part of that run. So I will be sitting half or 1/3 on Ethereum, the rest on BTC, and in between, I am going to either be taking ALS BTC trades, or alternatively, I am going to be also having money deposited, capital BTCs in this case, deposited in Bybit, and I will be trading the inverse perpetual contract in Bybit. So essentially, one of the things that I haven't discussed is like when I trade BTC US dollar intraday, I don't like to take that trade. I don't like to trade the contract that is going to be based on US dollar as the base currency, because if you think about it, the way that we trade BTC, or the way that we should be trading BTC, is thinking about the history of BTC. And the history of BTC has proven to be one in which appreciation has been the norm over 10 plus years. Therefore, how great of an opportunity is to trade a contract that you are being obliged, you need to comply with having BTCs to trade it, and knowing that you not only going to be making potential profits out of taking trades and be in and out, but also your BTC stack, just the BTC stack alone, can most likely appreciate over time against the US dollar. So it's like a double. I think Australians use a double whammy just for negative connotations, but it's a double price that you get, right? Because you can be trading only with BTC, and that BTC alone tends to appreciate against the US dollar. So to me, that's a great benefit, and that's why I love trading the inverse perpetual contract of BTC US dollar. Any other question? Something you wait on the market cap? Nick, hi, Evan. Great knowledge sharing session. Thanks. One thing that is specific to us is that they might tokens vesting from early seed private rounds, for example, quarterly. Do you take this into account somehow before you take a position? Do you, for example, only trade ALTs that are on the market for at least X amount of months to reduce the risk of sudden sales from seed investors? Please share your thoughts. Absolutely, Nick. Like whenever I go through a chart, and whichever virtual asset that is, and I look to the left and I have very little, if any, price history, I am not used and I don't trade those dynamics. I tend to trade dynamics where I have on my side price history. Price history is going to be creating the roadmap from which I can properly document my thoughts, and from there I can start to define my risk. It is true that whenever you have the early inception of a project within a specific exchange like Binance, you're going to see almost immediate dump of all these investors that had these multiple X in terms of reward. And they're just going to essentially be dumping that. So the dynamics that this creates is not really a market that is going to be trading on a level playing field based on the perception of fundamentals, but rather is a very isolated event. And the more that the market starts to build history, let's just say, 2 to 3 months, I'm starting to consider that asset to be tradable, especially if the volume is starting to pick up on Binance, and you can actually do that checkup real quick through the search coin name here in binance.com/market. So those would be my 2 qualifiers to start considering a crypto project to be traded. Otherwise, it's not my jam. It's really not where I feel most comfortable trading a crypto project. Connor, how do you assess volume when on platforms like Binance, when I am led to believe that the data is inaccurate or manipulated? To be honest, Connor, I have never questioned how inaccurate the data on Binance is. If you have, I would absolutely love to hear your thoughts, or if you can actually provide me the horse's mouth, whoever claims that this has been manipulated. From what I know, there was a study from FTX exchange about all this volume manipulation. And the last time I checked, I'm pretty sure that Binance came safe, and it was not being portrayed, or that it didn't really violate all this, criteria to be labeled a manipulator in the volume. So since Binance is going to be the exchange that onboards the most number of users, and it's the market leader essentially ever since 2017, that's what I take as a reference. So again, Connor, if you want to prove me wrong or you have any other sources, I'll be glad. But it's been working like a charm really to read volumes through Binance. So again, one of the things that I tend to do is I move away from adding complexities to my trading, and that applies to somebody claiming that all these volumes are being manipulated. Well, to a certain extent, but maybe if the relative volume still is going to be telling us, look, there's been a substantial increase in volume in relative terms, that alone is something that to me matters a lot in order to decipher whether or not we have what I call in terms of volumes. And I mean, there's so much, like we just literally scratched the surface today. But in terms of volume, we have, and one of my, by the way, like something I haven't touched on, like this is my course, like it's got 24 different lessons. I touch on absolutely everything. One of the lessons is about volume. Let me see, which one is it? Maybe two. There you go, the 11. So in this lesson, we touch on the false accelerations, smart accelerations, depending on the increase, the sequence of increase of volume. And that really tells you that there is big dogs, there's institutions, or there's like big money involved. If not, tends to be a fading pattern, etc. So Binance is fine. It's fine. That's bottom line, Connor. Yeah. All right. I don't think I got more questions unless I missed something else. That's pretty much it. Somebody posted the YouTube channel. Yeah, so feel free to check out the YouTube channel. At times, what I do in this YouTube channel is I am going to be downloading some of these videos that I've posted on the room. I have, lots of them. And I will be just repurposing these videos into my YouTube so that maybe more people can get to see what we get to do on a day-to-day basis. And that is either live trades, like showing my account, feedbacks, or why I did not take a trade, or a follow-up, how I'm managing the trade. So again, the whole thing, which should take you a month or months and a half, like depends, right? I mean, you really truly have to digest it. This is just ground zero. From there, your real journey begins. And if you are interested, be my guest, but it takes dedication. It has to be your passion, but within your passion, be aware that a balanced life is important if you want to have fun and not trade your time away for just simply, dreaming about making tons of money, being wealthy, whatever, which at the end of the day, if trading the markets, very few actually accomplish that on a consistent basis. But like, if you start to think about, like, if you start to really dig deep into it, like out of let's just say 20, maybe 1 or 2 will make it as a trader that more often than not makes money in the markets, and like 10 essentially are just there for gambling. Like if you're not a gambler, that alone already puts you maybe in the top 50. Seriously, like people are going to be taking such actions that to me immediately just suggest that they just in for the gambling mentality, that they just have a gambling mentality. If you start to actually then filter more aspects within this group of 10, and then you start to apply yourself, you start to be provided the right amount of education and the right education. If you start to put in the hours that it takes to do the back testing, which is also something that through the criteria that I teach, you can, and I encourage you to do, you can start to think about maybe from that group of 10, you become an aspiring trader within, you narrow yourself down to the last 5. And if you just do the extra amounts of adjustments that it takes to really improve your mental game, properly detach yourself from the monetary value of on a trade-to-trade basis, position sizing, and so forth. You even stack more trades on your favor. So for me, trading, I've always said that it goes far beyond just the action of trading. For me, is an opportunity of personal growth, and that personal growth then gets to be reflected in absolutely everything that I do in life. How I relate to my family, like how contented I am with what I have, like really listening to my thoughts much better and becoming a better communicator. Like trading has so many benefits, you can't start to imagine that, because it's an introspective journey within yourself. So with that, I think that I don't have any more questions. So yeah, everybody, thanks for tuning in. It's been a pleasure, and hopefully we get this lockdown mode lifted soon, and we can get to see each other face to face once again. Sim and everybody else,
Thank you, John.
Yeah, if no more questions, it's bye from me, I guess.
Thank you for doing what you do, man. I love you.
Cheers, guys. Thank you, Nick.
Thanks. Bye.
Jason, Melissa, Sim. Cheers, everybody.